Hello, good morning, and welcome to another edition of pre-market analysis. That will be looking into the previous market figures and data before the open of a new market for this week. Happy New Week, and I'm wishing you a very good market run ahead for this week. This is a disclaimer that this is not a financial or trading advice. Please do your due diligence before investing. Like we do, we are going to be looking at our figures for Friday, the 10th of October. So the NGX maintained its upward momentum into the weekend as the All-Share Index advanced by 1268.95 points, which is about 0.54% upward surge to close at 146,988.04. So we can see a little increase in the number of points on the ASI. This marks the fourth consecutive gain for the local boss, highlighting sustained bullish sentiment in select sectors. Despite this positive move, market activity weakened in value terms. We have the number of deals fell by 11.54%, showing fewer overall transactions. The volume traded rose modestly by 11.41%, suggesting mild accumulation in lower priced stocks. However, we can see the market turnover also dropped sharply by 58.93%, indicating a shift away from large value blue chip trades towards smaller retail-driven activity. Okay, so this divergence between index growth and value traded reflects light institutional participation as investors likely adjusted positions ahead of the weekend, while profit taking in high cap stocks are moderated. As we can see last week, the profit taking in high cap it's slowed down a bit, and it's looking like investors are coming back to run in their money in the high cap stocks once again. So looking at the market snapshot for last week, we can see the previous market, which was Thursday of last week compared to Friday, 145,719.09 compared to 146,988.04. You can see the upward surge about 0.54%. Then the number of deals also fell from 24,644 to 21,842. That's a downward surge of 11.54%. Then volume traded also increased by 11.41% from 346,909,544 to 386,569,991. When you look at the market turnover, falling from 27.4 billion to 11.2 billion, while we have volume traded increases. It shows that the mid cap and lower cap stocks got much of the traded or much of the transaction for Friday, and that's why you have such differences in the data. So looking at the top gainers for Friday, one, you have Danksem. Danksem closed, that's Dangote Cement, by the way, closed at 575 indicating a 6.48% upward surge. NEM closed at 29.15, indicating a 5.23% surge. Jais Bank closed at 4 naira 5 kobo, indicating a 4.65%. FTN Cocoa closed at 5.8, that's 5 naira 8 kobo, indicating a 3.57%. And lastly, on the top gainers list, we have CWG, that's Computer Warehouse Group, which closed at 17 naira 95 kobo, indicating a 3.46% upward surge. And we can look at the top losers also for Friday. We have Union Homes Real Estate Insurance Trust, that's U-Home rate, closed at 51 naira 85 kobo, indicating a 9.98% loss. And Mia came number 2, closed at 15 naira 1 kobo, indicating 9.85% loss. Then Sterling Bank closed at 7 naira 55 kobo, followed by Cornest, closed by 6 naira 21 kobo, and lastly E-Transact, closed at 15 naira. 15 naira. Then we have the expected market performance for today. So the NGX is likely to begin the week with a steady but cautious tone after the ASI advanced to 146,988.04 on Friday. The recent streak of gains suggests continued bullish sentiment, though moderating value turnover and reduced high value deals signal that large institutional flows remain subdued for now. Traders may see moderate upsides, especially in select retail-favored names, but broad momentum could slow if profit-taking emerges or institutions remains on the sidelines. So for today, though the profit-taking has really slowed down, but one or two things could come up before the market ends today that can still cause institutions to go deep into investing or remaining on the sideline. So sectoral and key stock performance for today, the retail and mid-cap names, mild accumulations in lower priced and mid-cap stocks is set to continue, with sectors such as consumer goods, small banks, and telecoms drawing most interest from retail participants. Blue chip stock, we have the activities in high cap counters should be watched for signals, for signs of renewed institutional buying or profit taking, as their subdued turnover last week could attract bargain hunters or further rotation. Then for industrials and energy sector, they may benefit if investors return to larger names for stability, but any upside should be tempered by risk of early week corrections. Then we have the pre-open signals and risks. Signals overall suggest a balanced market with retail activity driving volumes but thin liquidity in large caps, raising volatility risk if sentiment shifts. Key risks include profit taking on recent winners, the reversal in momentum due to macro or policy headlines, and the lack of institutional support, which could leave leading sectors exposed to sharp corrections. Attention will shift to Q3 earnings, like we've been mentioning for some time now. The previews are macroeconomic updates and sectoral news flow that can alter investor positioning and market direction. Our overall market outlook for today is to expect a session of steady range-bound performance and moderate accumulation in smaller stocks, with blue chips in focus for any sign of institutional rotation. The overall ASI uptrend remains intact, but caution is warranted as market breadth lags recent index moves and emerging profit taking could cap upside. Selective stock picking in quality undervalued names and defensive sectors will likely outperform broad market exposure until high value flows resume. And that will be all for our daily pre-market analysis for today. Make sure to do your due diligence before investing, and please make sure to subscribe to this YouTube channel. I'll see you same time tomorrow.